For the past 15 years, my sole focus has been studying historical, analytical, and technical analysis in the market. I've observed that breakouts often occur in clusters. In my journey, I've come to understand that opinions don't hold much weight. It's the clues that the market and securities offer that truly matter. I'll admit I'm not infallible. I've experienced losses, missed opportunities, and moments of frustration. However, these setbacks haven't deterred me. Over the last 3 years on YouTube and throughout my 15-year career in the stock market, I've consistently predicted major moves. My approach has remained steadfast and consistent. To ensure profitability on your trading and investment journey, it's crucial to recognize that buying courses or relying solely on free information won't suffice. Instead, focus on constructing your own system and establishing your own set of rules within a weight of evidence framework. This approach will ultimately prove to be the most beneficial for your success. To make a system work to follow someone, you must reverse engineer their minds, understand why someone is putting on a trade, and how did they get that information to put that trade, to execute that trade. To succeed in the stock market, you must build your own trading system through diligent study and historical analysis. This process typically takes at least 30 days, if not more, to develop a deep understanding and belief in your system. Consistently and sticking to your system are crucial once established, akin to maintaining a rigorous training regimen in sports. Treat trading and investing as a disciplined routine, dedicating time daily to study various concepts such as the 4-year election cycle, top-down analysis, and breakout strategies. By investing time in self-learning and problem-solving, you'll reap the rewards and continue to refine your approach throughout your trading journey. Ultimately, rely on your efforts rather than seeking shortcuts from others to achieve success in the markets. This video will focus on identifying the ideal time to buy stocks, followed by identifying specific stocks that are experiencing breakout opportunities. First, the definitions. Breakout: when the price of a stock moves above the top of its resistance zone. Just as there are grades of eggs, there are different qualities of breakouts. 2 hints to always remember are: the longer the time spent below the resistance, the more significant is the eventual breakout, and the greater the expansion of volume on the breakout, the more bullish the implications. Breakdown: the mirror image of breakout as the price of the stock moves below the bottom of the support zone. Unlike a breakout, a breakdown doesn't need a very heavy volume to be valid. Stocks can literally fall off their own weight, but there should be some increase in volume. Pullback: after a stock breaks out of its training range and advances, there is usually at least one profit-taking correction that brings the price of the stock back close to the initial breakout point. This is an ideal second chance to do further buying, especially if the pullback occurs on a sharply decreased volume. On the other hand, after a stock breaks down below support and declines, there is usually at least one pullback toward the breakdown level. If this occurs on very light volume, it is an ideal entry point to sell the stock short. Let's start with the investor's way. There are 2 opportune moments for investors to initiate new positions, both revolving around the breakout point. The first occurs when a stock breaks out of its basing phase and enters the advancing stage. The second and safer opportunity arises when a stock retraces back towards the breakout point after the initial buying frenzy of the basing stage subsides. Buying on a pullback allows investors to assess the stock's behavior following the breakout. They can evaluate factors such as volume, how far the stock moved above the breakout point, and whether volume contracted during the pullback. Observing this action helps determine whether the stock is a potential strong performer or a weak one likely to decline. However, waiting solely for pullbacks may cause investors to miss out on significant opportunities. Stocks that continue to advance without retracements often represent the strongest performers and can yield substantial gains. To balance risk and reward, the long-term investors may consider buying half of their intended positions on the initial breakout, and the remaining half of it pulls back close to the breakout price and exhibit favorable post-breakout behavior, the trader's way. Another profit opportunity for the new buying arises during the advancing stage, particularly when the stock retraces back close to its moving average and consolidates. When the stock breaks out above the top of its resistance zone, in this scenario, it is known as a continuation buy. While this type of buy offers high potential of rapid advancement, it also entails greater risk. Continuation buying is more suitable for traders than long-term investors due to its high risk profile. However, even investors may find it worthwhile to engage in late advancing buying during periods of strong overall market conditions when initial breakout opportunities are limited. In the early stages of a major bull market, there's typically an abundance of stocks breaking out of their bases for the first time, making continuation buying unnecessary for investors. Conversely, in later stages of a bull market, such as in the years 1986 and 1987, there may be a few early advancing buy opportunities left, but continuation buying opportunities are still prevalent. During such times, investors may consider participating in continuation buying strategy to capitalize on ongoing market momentum. Before we show you real-world examples of breakouts and continuation buying, you need to know the mantra for 2024. To say it has been a fun 2024, it is an understatement, and the fun looks to continue. Our mantra for 2024, amidst predictions of a bear market or a bull market, both will miss the mark this year. In 2024, success will hinge on stock selection, with most gains driven by a select few mega capitalized companies. If you find yourself in those companies or sectors, you're poised for a good year. Notably, last year, significant gains were elusive for those not invested in the Magnificent Seven. The artificial intelligence sector, particularly in semiconductors, is poised to lead the way in the stock market this year. If you are invested in this sector or exploring companies supporting it, significant reward could be in store for you in 2024. You will be hard-pressed to find breakouts this year. Most of the buying must be done in this continuation buying, specifically in our favorites: NVIDIA, AMD, SMHs, ARM, AMAT, Bitcoin, Ethereum. There are a few breakouts happening, but they are slim. What is this idea of continuation buying? This idea of continuation buying is NVIDIA, NVDA. For the last 1 year and 4 months, we caught the breakout on NVIDIA, and every week since then, we've been telling you to do buy on the dips. And to formulate what continuation buying is, it is NVIDIA. Before we get started, disclaimer: the information provided on our channels for education and informational purposes only, and is not intended to be a substitute for professional financial advice. Protect your capital by all means. Building the system, building your ideas, building your investment philosophy is the key. As you know, we have a 3-part process: overall market, sector phase, and then we break it down into the individual security. What is the overall market? Even though it will be as good as last year, it will be a positive year in the stock market. Thus saying that, we are not always bullish because we are expecting next year to be a very poor year in the market. This year, it is specifically sectors that you must be in to win in this market. We look at the NASDAQ 100, and the majority of stocks are in a downtrend, led by Tesla and Apple. But as we've been telling you, semiconductors, artificial intelligence, and cryptocurrency are doing very well. Let me give you my game plan. Every time NVIDIA sells off, I buy options. For the last 1 year and 4 months, that's all we've been doing. Buy NVIDIA, buy ARM, buy SMHs, and it has worked out very well. The same recommendation we'll be giving you today, and we're starting off with our favorite, NVIDIA. As you know, since January 18 of last year, we have been in NVIDIA. Every week, every month since then, we've been telling you to buy NVIDIA. What has changed recently is that we were telling you short term we were going to have a pullback in NVIDIA. We have this pullback. Let's go over first our investment philosophy in buying. Are we in a bull market? Clearly, we're in a bull market off the QQQs. Are we in oversold right now? We have worked off being overbought to being oversold on a lot of RSIs and a lot of sentiment indicators. Is NVIDIA a cheap trick? No. The one huge recommendation I will give you is do not short into NVIDIA. Are we prioritizing uptrends? Absolutely. Will we exit downtrends promptly if it goes against us? Absolutely. And have we maintained consistency through the years? Yes. Let's add in what we learned today. Continuation buying. During the advancing stage, particularly when the stock retraces back close to its moving average and consolidates. When the stock breaks out above the top of the resistance zone in the scenario is known as continuation buying. While this type of buy offers high probabilities of rapid advancement. Let's look at this chart here. What have we done each and every time? Every time there was a pullback, we bought. We did not have many pullbacks to buy in. I feel this is a perfect opportunity to buy. Short term, intermediate term, and long term. This might only last 6 more months on NVIDIA. One day NVIDIA 2 will go down. One day NVIDIA 2 will see and look like Tesla and Apple. But right now, I believe that is not the day. We have warned you that there was a pullback coming. We are close to the ranges of this pullback. If we look at the semiconductor industry itself, it is the same thing. It pulled back, we're buying in. You will quickly know if we're right or wrong. These are our rules. If we look at the Magnificent Seven, 5 out of the 7 are in continuation buying. The problem is we're starting to see holes. Apple and Tesla on rallies could be good shorts, but we are not shorting into it as of just yet. We are looking to be buying our positions in NVIDIA, ARM, and the semiconductors because of what you learned today, continuation buying. If you look at our overbought, oversold short-term indicators, because of the strength in NVIDIA, this thing never really hits zero. And if it does hit zero, it's always a great sign. So we are leaving NVIDIA for the short term at 43.54 at a buy. If you look at medium term and long term, it looks like we will be heading upwards again to the upper 100 ranges. We continue forward. We haven't seen these numbers at 25.08 at an oversold level in quite a long time. For many months, it's been at a neutral reading. For the first time, it's at 25.08. Then we break it down into the CCI. It fell through the 100, and now let's see if it can get above the 100. Thus saying this, it's going to sound like a broken record for the last year and 4 months. We are bullish, long-term, intermediate term, and now short-term off. NVIDIA, NVDA. Did you get this stock on the breakout? You did not. Do you believe in continuation buying, where this stock will go up higher and keep going up higher? It will be hard-pressed to find a lot of breakout points. As of last year and 3 months, it was a lot easier finding breakout points. But thus saying that, there are certain stocks that have a chance to break out. What do we look for in a breakout point? There are 2 opportune moments to initiate new positions, both revolving around the breakout point. The first occurs when a stock breaks out of its basing phase and enters the advancing phase. The second and safer opportunity arises when a stock retraces back towards the breakout point after the initial buying frenzy of the basing stage subsides. Let's look at the bigger picture of the cannabis industry, more specifically the ETF MJ. I want to take a look at a big picture over here. And if you see where it came from in 2018, it got completely decimated from its release. Then it went back up for a certain point, and then again from the year 2021 all the way to now has been in a declining phase and then a basing phase. We saw this breakout once before in September of last year, where we said if it closes above the 470, to buy in. At that point, it never closed above the 470 and went straight lower. But again, basing out for the next 6 months and recently has broke out. So what does this breakout point mean to us? Breakout point means after a huge declining phase, it goes nowhere from anywhere from 3 months to 2 years. And then suddenly it breaks out on a high volume. Why is this a good pattern? Imagine you bought the cannabis industry MJ at any point and it's gone from 10 all the way down to 3. You would probably never touch it just based on a psychological reason. But suddenly on volume, it goes up, and it goes up. This is what we're looking for. This is hard pressed to find a lot of these breaking out points. The second part of it is that if it does pull back a little bit based off RSIs, this is the opportune point to buy into it. Of course, we have stop losses. And if you look at it, this was on our radar last September, and again is on our radar now in April. If this breaks out, it could easily go to 10 without even a thought process. Let's continue further. If you look at the short-term indicator, it has a potential to go to 100. And again, on our short-term, medium-term, and long-term indicators, RSIs, all grade point. In the next upcoming videos, we will be focusing on both continuation buying and breakout points when they happen. You know the catchphrase, study it, analyze it, adapt it. Peace.